This neighborhood is 5 miles from the Intracoastal Waterway in Wilmington. It is 8 miles from the Cape Fear River and considered a minimal flood risk by FEMA. And yet, a year ago today, Hurricane Florence flooded this street, causing significant damage to nearby homes, and they didn't have flood insurance.
The deed and the survey from a mortgage back in the 80s has very clearly stamped on it, this property is not in a flood zone.
Meyer and his mortgage provider were relying on famously outdated FEMA flood maps. Insurers historically have avoided offering private flood insurance because it was just seen as too risky. In the last few years, though, tech startups have rushed in, and with just an address, they're assessing risk that varies not neighborhood by neighborhood, but property by property.
We gather all this data and computing power and in that 1 second make a decision on risk.
In this industry, it's called InsurTech, and the opportunities for growth are enormous. Take Neptune Flood Insurance, for instance, on track for 400% year-over-year growth, and they've just announced a partnership with the world's largest property and casualty insurer, AXA XL. In fact, Verisk, that analysis ratings agency, says this could be a $42 billion market potential opportunity. Kelly?
Contessa, I'm also curious, if you're looking for a house or you're, looking down one of these streets, the cost of flood insurance, if they're now doing it house by house instead of as broad zones, could vary widely, right?
The CEO of Neptune says that he actually has a couple clients who asked for some analysis. One neighbor, similar houses, one neighbor was assessed at a policy $400 a year. The next door neighbor, a policy for $8,000 a year. He says he told that particular potential client, you'd probably be better off going to the National Flood Insurance Program.